Well, more now on BP's big problem. My next guest had misgivings about BP and the oilfield services companies once this crisis started, about more than a month ago. Sarah Hunt manages more than $6 billion at Alpine Mutual Funds, where she focuses on energy stocks. It's actually been 57 days, right?
Yep.
I'm correct on that. Okay, so 57 days into this crisis. Now we're talking about cutting dividends, and you've got these guys being dragged up on Capitol Hill. As a long-term investor, what do you make of this?
Well, I think that it's a little dangerous to start telling companies what to do. I understand this is a very big problem, and they absolutely want to make sure that people get paid. I'm a little wary of setting precedent in telling someone what to do with their dividend. Now, I think from a PR standpoint, maybe there's an issue there. It may be good, but it's 12% of the UK's dividend payments are made by BP. That's a big number for the UK.
And yet it seems like we're at the point where the dividend seems so puny compared to the percentage drop of BP's stock price.
Right. Oh, absolutely. But there's a lot of, it's owned by a lot of pension funds that are longer-term holders, so there's an income component to that as well. I think that at the moment right now, people are really worried about the overall, how much this is going to cost overall. So I think either doing something to make politicians happy is not a precedent that you want to set, but at the same time, this is a gigantic mess, and I think you want to get out in front of it.
Well, for the energy industry, the health of the future of the energy industry, is it better for BP to be dead than alive?
I think it's much better for them to be alive. And I think it's much better for the Gulf of Mexico for BP to be alive, because if you want those claims settled and you want this cleaned up, alive is a much better prospect. They generate a lot of cash. They have a lot of great assets. I think that all of this talk of sort of killing them off prematurely is really not helpful, and I don't think that ultimately that would be in any way, shape, or form good for the people who have claims against them.
Sarah, you've talked about the theater of the market and how we're all so reactionary to any headline that comes out. What catalyst do you see happening that could maybe change that view and perhaps just go back to the fundamentals?
Wow. Well, for the energy side, I think that you're just going to have headlines that are beyond the fundamentals for a long time, because I think that this is a mess that's going to take a very long time to clean up. It's going to stay in the forefront. It's very you're very public. You're talking about the beaches of Florida. You're talking about a part of the U.S. that people spend a lot of time vacationing. So there's a big issue here in terms of the visuals. So I think for energy, that's going to be very tough.
And yet, at the same time, you go through all those oil service stocks, and there are plenty of analysts who are still bullish on the sector. What's going on there?
Well, ultimately, I think that energy just needs a longer timeline, because right now it's going to ride on headlines. But if you're a longer-term investor, there's some great values out there. And I don't think that service long-term is a problem. I just think short-term, with a moratorium on the Gulf, you've got a big chunk of the market that's out of the market now. So from a utilization rate and pricing standpoint, you don't have a lot of pricing power.
But is your ROI changing for these guys? Because they're going to have to increase safety precautions. They're going to have to spend much more money on protections.
Absolutely. And you're going to have that they're going to cost more. Insurance is going to cost more. Everything is going to cost more. There are service companies that will benefit from this. There's been a lot of talk about third-party inspections. Right now, we don't actually have a definitive answer of who those third parties are. They will arise out of some of the companies that are already extant. So you'll start to see companies starting to do some of this inspection work that they're not doing now. So there will be replacement.
I mean, are there examples of the names that benefit from all this?
Well, I think ultimately, if you've got to have BOPs, blowout preventers, if they can't be as old as this one was, you're going to see the manufacturers like Cooper Cameron, you're going to see Drillquip, you're going to see the companies that make these, they're going to have to be replaced more often, and they're going to have to be serviced more often. So there is a component to that where a lot of this equipment is going to have to be replaced, I think, probably more often. Now, whether or not that's actually the answer, because it sounds like this had a maintenance issue, is a whole nother problem.
Right.
But at the end of the day, I think that people are going to look at the age of some of this equipment and say, even though we've been saying that's okay to use it, you may not be able to. So you may have a replacement cycle.
And how do you protect yourself against more volatility in this sector?
I think it's difficult to stay right now with the stocks that are involved in the Gulf, just because from a day-to-day, if you can have a long enough time horizon that you're not worried about it, there might be some great
long
values.
Enough means what, 10 years then?
At least 2 or 3, because I don't think it's 10, because I think that you'll know when we get this leak stopped and we start to understand what the actual damages are, because that's the other thing, is that we're talking about bankrupting a company with $100 billion in assets, and we don't even know what the extent of the damages are. We know they're going to be high. So there is a point at which, when we start to understand what those costs really are, that you can start to get more comfortable that you don't have this unlimited liability out there.
Okay, Sarah, we'll have to leave it there. Great for you to stop by. Good to see you in person. Sarah Hunt of Alpine Mutual Funds talking about the energy stocks. And